Hi everyone, welcome to another update on the Stock Screener. Today we're going to continue our comparisons between gas companies, and I found one that I wanted to share. So we are going to compare Pieridae Energy with Birchcliff Energy. Both are gas producers in America, and I got to know Birchcliff Energy from someone on the website. I thought it was a very good company, but having seen Pieridae Energy, I am actually more skeptical now about Birchcliff, and I will tell you why. So first, why do we invest in natural gas? Because we have the EV boom. Everyone is going to go to electricity, not in oil. So gas is the future. And we also have the arbitrage between US gas and EU gas that is going to close. Oil demand is going to come down in the future because transportation is going to EVs. So natural gas is the future. Demand is going up there. Also, the arbitrage between US gas and EU gas is going to close somehow. So we bet on the rise of US natural gas. So Pieridae Energy charts is looking good. It's pointing upwards. And Birchcliff seems to be flat. So why is this? So let's dive into the numbers. So Pieridae Energy and Birchcliff are miles apart in market cap. One is 230 million, the other is 10 times bigger, more than 10 times bigger. PE ratios are almost the same, around 3. So far so good. Both have the same amount of gas, 80%. So both very good gas plays. But look at this, 40,000 BOEs per day in production. Birchcliff only 80,000. So double. And that is the number that you need to know. It's always double. Production is double. Yeah, let's take a look at the debt. This has 200 million in debt. This one is debt-free. Some people think debt-free is good, but I think having debt is actually better because you don't need to pay taxes on dividends, no taxes on buybacks, and you have financial leverage, which you can see here. They have 20% interest rates to pay on that debt, and they pay off the debt, they will have free money, and that PE ratio will come down even more. Okay. Now the first thing, decline rate. Pieridae Energy has a much better decline rate, only 8%, and Birchcliff 25%. So that means they need to invest more in capex. And you can see that here, 250 million capex, much higher than 50 million capex. What's good is that Birchcliff has lower operating costs, so that's one positive. But on free cash flow, because of their high capex, you can see that it's also double. So 200 going to 500, it's about double, okay, at 5 ICO. So again, double cash flow. Tax pools also double, 700 versus 1.5 billion. And the reserves are also double. You could say 16 and then double is 25. So yeah, royalty is about the same. Now comes the question. If everything is double, then why is Birchcliff trading at 3 billion? Shouldn't Pieridae Energy be trading at 1 billion at least? Right? So I think Pieridae Energy is massively undervalued when you compare these numbers. All are doubles, And here it's a tenfold difference. Keep that in mind. Now let's look at the leverage. So you can see here the 5 times free cash flow basis. When we take 10 ICO gas prices, that's about $12 for Henry Hub. Birchcliff typically has more Henry Hub gas pricing, so 12 should be around the 10 here. You can see here a massive difference. So at 10, we go from 250 million market cap up to 3.5 billion. That's more than a 10x at 10 ICO gas. Now, Birchcliff at $12, it's only a triple. So leverage in Pieridae Energy is much higher than in Birchcliff. And that's because of the high capex and also because Birchcliff has lower operating costs. So if you want to have leverage, choose Pieridae Energy. It is super cheap based on their production numbers and financial leverage. Also more tax pools, capex much lower, decline rate lower. So I have no idea why this is trading so cheap. So that was the comparison between Pieridae Energy and Birchcliff Energy. So make your conclusion, and I'll see you in the next video. Bye.